Hey traders, this is Jeff from ZenTrader.ca. Today was a very significant day. My market timing signal turned bearish. The last time we had a up signal was December 28th. We had a sidelines call in the middle of February, around the 16th, 17th, and we got short today. I entered 1/3 of positions in SPY and diamonds, notified the subscribers on the free newsletter on the blog, and I will also send out an email when I complete those positions. So if you're interested in getting those updates with timing signals and position updates, you can do so at zentrader.net, or you can just go to the blog and sign up there. It's free, so you've got nothing to lose. So red arrow here, and I'm gonna add on some hopefully some strength over the next day or two. You can see here that we've hit the upper channel. Most likely now we're going to pull back. As to how far, it's anybody's guess. I don't expect this to be a deep correction, given that the market has been it's been so strong, but that's a bias. So I'm just going to play this as a trade to the downside. Take my timing signal, follow that, and not let what I think the market's going to do get in the way of my trading. And the Nasdaq summation was really signaling this top here. You see here, basically hitting resistance. You can see last time we had we hit this area above 70 in the RSI. The Nasdaq summation really pulled back. I just want to show this 60-minute chart of the Dow, and you can really see how it's, this is very bullish, constructed base on base on base, but this base, we really haven't made any headway over the last 2.5 weeks of trading. So, this is very telling. Lower highs on the RSI and the inability to really push higher when the Nasdaq was moving higher. So, again, this really tight base, and this, even though we haven't broken down, this is bearish activity. This is distribution that's most likely going on. You can see here we broke down from a rather large wedge pattern here. We haven't really had some accelerated selling. You can see the McClellan oscillator continues to hit new lows, but just the fact that a general whole sense of stalled price movement in the Dow, and we've basically just come out of that wedge just by the fact that we stopped moving higher, which this market really had not done up until now. So this is definitely some weakness. Let's see here, looking at how far this could pull back. This chart caught my eye because it had I drew a downsloping trend line from these tops, and I just took this level around 1280. There's a lot of points that it touches here. It proved to be resistance here. It broke out there. This general area, there's a lot of support and resistance here. It just seems like this is another area where these 2 points line up. Do I think we're going to go this low? I doubt it. This green shaded area is the 50-day moving average. This, if I had to guess, I would say somewhere between this 50-day moving average and this area of confluence here, somewhere around there could be the area where we find support for the S&P. Last chart I just wanted to show was the dollar. It's basically has this falling wedge pattern here, bullish falling wedge pattern here, and could easily get back up to the 81.50. And then at that area, I would expect it to find resistance. And, basically this is the gravy, I would say. And then the real work is whether or not we're going to find resistance there or break out. So, to sum this up, timing signals bearish, shouldn't be buying longs. Get your watch list ready. Now that's what we should be doing now, is getting some stocks that we want to buy on pullbacks, but really be taking some profits and entering some shorts, dipping your toe in, kind of wait for more selling, see if that happens, see if we get that follow through.